What if I told you your stocks can generate income without you selling them, without trading them, and without taking any extra market risk? Sounds unrealistic, right? Because most of the people believe that money in the stock market is only made when the prices go up or when you trade actively. But there's a third way, a smarter way, used by informed investors. It's called SLBM, Securities Lending and Borrowing Mechanism. And today's video, we are going deep into this concept. Starting off with what is SLBM. At first, the name sounds quite complicated, but the concept is actually very simple. Let me break it down for you. SLBM is a system provided by stock exchange where investors can temporarily lend their shares to other market participants in exchange of a fixed fee. You're basically allowing someone else to use your shares for a certain period of time, and in return, you get fixed fee. Now moving forward, let's talk about how SLBM process works. Let's understand this with an example. We have Aman, the lender, and Ria, the borrower. Aman decides he wants to lend his shares. He checks which stocks are eligible under SLBM. He approaches his broker and places a lending request, mentioning the quantity and the fees he expects. On the other hand, Ria wants to borrow those shares, and she places a borrowing request through her broker. Now comes the interesting part, the price matching. Just like normal trading, the lending fees is matched between the lender and the borrower. Once the match happens, shares are transferred from Aman's account and credited to Ria's account. And this contract runs for a fixed duration. On expiry, Ria returns the share and Aman receives the lending fees. That completes one full SLBM cycle. Now, let us address the very important concern, impact of corporate action. What happens if something happens to the company while your shares are lent? Let's break it down. If dividend is announced, you still receive it. The borrower compensates you for that amount. And if there's a stock split, you get back the adjusted number of shares. If there are events like bonus, buyback, open offer, then the contract may get closed early. Overall, your ownership benefits are largely protected. But you must be aware there are some events that might affect your contract duration. Talking about the benefit of the lender, that why you should consider SLBM from a lender's perspective. The biggest advantage is very simple. You earn extra income from your shares without even selling them. But that's not all. Your long-term investment remains untouched. Your portfolio keeps on moving as per market movement. And on top of that, you generate additional income. Think about that. Your stocks are already sitting idle. SLBM just allows you to put them to work. And this is exactly how smart investors increase their overall returns. Now let's be practical. Every opportunity comes with a risk. And SLBM is no different. Here are the key risks you should know. First, limited demand. You may not always find a borrower, so the returns are not always guaranteed. Second, recall limitation. You can request your shares back early, but it depends on market conditions, so it's not always instant. Third, liquidity constraint. Not all stocks are eligible for SLBM, only selected stocks can be lent. Fourth, taxation impact. Your earnings are taxable, so your net return will be slightly lower. Now let's flip the perspective. Why would someone borrow shares and pay a fees? To be very honest, there are very strong reasons behind it. First, short selling opportunity. Borrowers can sell their shares at higher price and buy them back at lower price and then return the shares. Profit comes from the price difference. Second, arbitrage opportunities. Sometimes there's a mismatch between the cash market price and future price, and borrowed shares allow the traders to take advantage of that difference. Third, avoid settlement issues. If a trader cannot deliver shares, then they can borrow shares through SLBM instead of facing heavy penalties. There are certain risks faced by the borrowers too. Let's break it down. First comes the market risk. If the prices go in the opposite direction, they incur losses. And on top of that, they still have to pay the lending fees. Second, foreclosure risk. The SLBM contract may close early due to corporate action or lender's recall. And if the market moves against them during that time, their losses may increase. Let's quickly cover some practical aspects of this. First, the returns. It varies between 0.5% to 1% per month and around 6 to 12% annually approx. But remember, this depends on demand. Second, charges. There are no major exchange charges, no STT and stamp duty. However, some brokers may charge commission on your earnings. Third, taxation. Lender's income is charged as income from other resources, whereas the borrower's profit is taxed as capital gain. Last and the most important is volumes and liquidity. There are usually more lenders and few borrowers. So consistent income heavily depends upon market participation. Moving forward, let us know how to place SLBM orders. You might be thinking, where do I actually do this? Here's the reality. To place SLBM orders, you need to check eligible stocks, speak to your broker and place requests through them. And your broker handles the entire execution. So before starting, it's always advisable to speak to your broker and understand the process. So here are quick things to remember before you jump into SLBM. Only selected stocks are eligible. SLBM contracts are time-bound. Early exit is possible but not guaranteed. Income is not fixed or assured. And this is best suited for long-term investors. Let's conclude this. So what we have learned today is that SLBM is not a shortcut to get rich, but it is a smarter way to generate extra income from the stocks you already own without disturbing your long-term strategy. Most of the investors focus on price growth, whereas smart investors think differently. They find different ways through which their portfolio can generate extra income without trading. And that's where SLBM fits in.